Ladies and gentlemen, good day and welcome to MTAR Technologies Limited Q4 and FY'24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, sir.
Thank you, Nirav. Good morning, everyone. On behalf of MTAR Technologies Limited, I extend a very warm welcome to all participants on Q4 and FY'24 result discussion call. Today on our call, we have Mr. Srinivas Reddy, sir, Managing Director and Promoter, Mr. Guneshwar Rao, sir, Chief Financial Officer, Ms. Srilekha Jasti, Head IR and Strategy. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on the company's website. I would like to give a short disclaimer before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our belief, opinion and expectations as of today. The statements are not guaranteed for our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Srinivas, sir, for his opening remarks. Over to you, sir. Thank you.
Thank you, and good morning to everyone. Thank you for taking the time to join us today. Today on the call, I am joined by Mr. Guneshwar Rao, Chief Financial Officer, Ms. Srilekha Jasti, Head Strategy and Investor Relations, and Orient Capital, our Investor Relations Partners. We have uploaded our updated investor deck, press release and results highlights on the stock exchanges and company website. I hope everybody had an opportunity to go through the same. So today, basically as a leading provider in multiple segments in terms of clean energy, defense, nuclear, space and aerospace sectors, we have consistently delivered robust financial performance and strategic growth in the past. With regards to financial year 24, we definitely encountered a dip in our earnings, primarily due to the following reasons. One, customer transition impact. One of our key customers, Bloom Energy, contributing substantially to our revenue stream, has initiated a comprehensive transformation of their business model in terms of the hot boxes or the model what they wanted to change for higher power output. Consequently, there has been a temporary reduction in their procurement volumes from us, impacting our earnings. Once the new model Santa Cruz is fully implemented, it will result in enhanced operational synergies and more sustainable partnerships. We have clear indication that we will bounce back to higher procurement volumes by Bloom during second half of the year. Two, our team is closely collaborating with number of MNCs and worked on various first articles in various projects, and company had to incur expenditure for development of these first articles, which has definitely affected to a certain extent our EBITDA levels for the year, but will result in high revenue stream for coming years. For FY'24, we had revenues of 8 crores in MNC Aerospace Division, and for FY'25, the revenues generated will be close to about 72 crores. This is a clear indication of what kind of work we have done in terms of developing the various first articles and products for the multinationals that we are working with right now. We will also be signing number of long-term agreements moving forward with MNCs in aviation sector, and we have already received the agreement for one of the aviation sector projects from IAI, which will result in a business opportunity of close to 90 million to 120 million over the next 15 years. We have been working on these long-term agreements for more than 6 months. Further, we are working on such long-term agreements in various projects with various MNCs, and we should receive the final agreements over the next 2 quarters to take this forward, and which would result in higher revenue stream generation over the next 2-3 years. For the financial year FY'24, we had also a dip in our value creation by close to about 25 to 30 crores in the shop floor in various nuclear and space projects because of the deliveries of the incoming raw materials in the second half for the major projects. Based on the current situation, we have the raw materials in place for the current financial year to enable us to make substantial progress in these projects, not only to achieve the desired sales, but also to achieve the value add in the shop floor on all the projects. Our team is collaborating with various customers to integrate our cutting-edge solutions into the revamped framework, ensuring mutual growth and long-term value creation. Despite this short-term impact, our core financial metrics remain strong on long-term basis. Our aim is to have diversified portfolio across multiple sectors, which mitigates risk associated with any single customer. We are working towards proactive cost management strategies to improve our EBITDA margins, and investments in R&D projects, including developing first articles and products, will position us favorably for future market opportunities. We are very optimistic about our future outlook, supported by several key factors: diversification of customer base and continuous development of first articles for various MNC customers as global demand continues to rise. Ongoing expansion plans and strategic partnerships are expected to drive the revenue stream. Our commitment to sustainable practices resonates with industry trends and regulatory framework, enhancing our competitive edge. Based on the current estimates, we are expecting increase in revenue guidance of 30 to 35% for FY'25 and EBITDA margins of around 22%. 40% of the revenue should be achieved in the first half of the year, and the rest 60% would be achieved in the second half of the year. We will continue to grow at a minimum of 30 to 35% for FY'26 with improved EBITDA margins close to 24% plus. We have closed the year-end order book at 915 crores and expect to have a closing order book of 1,500 crores by March FY'25. The major orders are expected from nuclear, space, defense, MNCs and clean energy sectors. I'm happy to announce that we have onboarded Mr. Arun Ahuja, Chief Commercial Officer, who will be responsible for business development and MNC supply chain. We have 25 years of vast experience in supply chain, business development and manufacturing, and work for prestigious firms like Schlumberger, Alstom, L&T and Andrex. Under the leadership of Arun, we are expecting to enhance the customer base further, and he has already initiated discussions with various global MNCs, and the target is to diversify even into the oil field sector in a very big way, and which he has enough connect in these areas. Over the years, he has worked with Schlumberger and the others. In conclusion, our current quarter and financial year 24 reflects a pause in our earnings, but our long-term trajectory remains robust. We are confident that the strategic shifts taken by the company unlock new avenues of growth. Our diversified portfolio, strong financial foundation, and unwavering focus on innovation and sustainability will continue to drive our success. I do understand that most of the shareholders would be disappointed with the financials for FY'24, but please look at the long-term goal of MTAR and the kind of work we have done in the past 1 year to build strong customer base to enable robust long-term trajectory for the company. I would like to thank at this moment all our engineers, middle and senior management of MTAR who worked hard in achieving the results the company needed for a robust future outlook by developing various first articles and products during the year for future growth. Bloom Energy transition impact encouraged us even more to strengthen our other verticals very aggressively during the year. And to conclude, we have done our best to have a strong future outlook for the company. I would also like to thank all the investors and shareholders of MTAR in supporting the company. It's a technology-based company, and such blips are expected, but on long term, we are always the winners, and we strongly believe in that. Now I would hand over to our CFO, Mr. Guneshwar Kushrala, to take you over the financial performance of the company for FY'24 and Q4 of this year. Thank you.
Thank you, Mr. Srinivas Reddy. Good morning, everyone, and a warm welcome to our earnings call today. I will take you to 3 financial highlights. After that, we will open the floor for questions and answers. And this financial year, we have clocked a revenue of FY'24. We have clocked a revenue of 580.8 crores from operations as against 573.8 crores in FY'23. The company had posted an EBITDA of 102.7 crore in FY'24 as compared to rupees 150 crore in FY'23. Our profit before tax stands at 73 crore in FY'24 as against 140.2 crore in FY'23. the company has registered a profit after tax of 56.1 crore in FY'24 as against 103.4 crore in FY'23. As explained by our MD, the decline in profitability mainly due to operating leverage and also in deferment of orders in clean energy and space verticals. However, we are working on adding the new customers and setting up the aerospace division to cater to the aerospace customers. So the company has witnessed an improvement in the net operating cash flows to 57.4 crore in FY'24 compared to 7.4 crore in FY'23. This is mainly due to various monitoring steps we have taken in the company and achieved positive cash flow from the operations. The company is focusing on improving cash flows from operating activities further by end of the current fiscal year. So as the MD said, we are actually targeting to increase our revenue by 30 to 35% in FY'25. Our NWC days stands at 252 days in FY'24. We have achieved a reduction in receivables and raw material inventories compared to the last financial year. RM days in FY'25 stands at 118 days compared to 154 days in FY'23. Similarly, receivable days were reduced to 93 days as against 132 days in FY'23. So while the scope of reduction in WIP is limited for the now based on the product mix, we are focusing on reduction of RM inventories further to lower NW days to 230 days by end of FY'25. Our debt levels remain healthy where we have an outstanding fund-based debt of 190 crores. The company's working capital debt is 93.9 crores. After adjusting positive cash balance of 39 crores, the net debt is only 54.7 crores in FY'24. So the positive cash flows is mainly resulting to the last days of the quarter we received the funds which were repaid in the April 2nd of the financial year, this financial year. We are working in line with our strategy to add more customers and accordingly we are setting up various aerospace verticals, specific unit we are catering for the aerospace customers. Also are trying to increase our wallet share with the existing customers. As informed by our MD, there could be short-term impact on margins, but our long-term vision is intact and growth is intact. Thank you all.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Vipraw Srivastava from InCred Research. Please go ahead.
Hi, I'm audible, right?
Yes, you are.
Yeah. So just two questions for management. So basically, Bloom Energy, for which significant revenue comes from South Korea. So I was going through the green hydrogen laws, and South Korea actually mandates that if you localize your production, there's a higher chance that you will get orders in South Korea. And actually, Bloom competitor is doing the same in South Korea. So that is a direct risk to MTAR because obviously localization of production means they will produce all their parts in South Korea. So, and does the management see this as a risk going forward? Can this be a possibility risk? Please, yeah.
So, as far as South Korea is concerned, I think the new government they wanted localization, but it can only be done to a certain extent. They are still exporting substantial revenues to South Korea, even today, and that's not going to change. So, not only we are supplying to South Korea directly, but also to the US. So that's really not going to change much in terms of the localization. Every country has that localization policy, but they can do it only to a certain extent. But if you look at our revenue stream, the revenue stream is not only coming from USA, but also from South Korea as well.
Okay. Cool. Noted. Second question is regarding Bloom's deal with Amazon. They were installing Bloom servers in Oregon, which actually didn't go through. So Amazon's partner SK now has 250 million of inventory on their books of Bloom fuel cells. So I mean, can this result in a pushback for MTAR going ahead since SK has a lot of inventory on books because that Amazon deal didn't go through? I mean, what was the communication from Bloom to you guys? Any thoughts on that?
So basically, if you look at our current forecast for the current financial year, we have taken 3,300 units of hot boxes, and last year we have done 2,752. So we are still being on the conservative side in terms of the number of boxes that we are going to deliver to them. And I've heard recently they've also won a contract with Intel, which the requirement is going to go up in the second half of this year. So that I don't think will have an impact on any of the numbers what we have taken in terms of what we can do with Bloom at this point of time.
Okay, noted. And yeah, and last question is that you have to understand that Bloom's fuel cell does emit carbon, right? They have some carbon emission per megawatt hour, and actually that carbon emission is higher than certain states in US grid emission. So a lot of these states are actually lobbying against Bloom. They don't want their fuel servers installed. So, I mean, what are your thoughts on this if this happens? I mean, because Bloom emits, I guess, 600 lbs per megawatt hour, and some grids in US are completely renewable. They emit 200, 300 lbs per megawatt hour. So this can be a potential risk to Bloom, and in that sense, can be a risk to MTAR also. So how do you see that happening? Have you had talks with Bloom's management on this?
So basically, when you convert methane, CH4, and then during the catalyzation process, there will be a very marginal carbon emission, right? So obviously, the electrolyzer process will have zero carbon emission. That's the ultimate goal. But Bloom has expanded into many number of states in the United States as far as we know about it. And I don't think this will really affect their long-term plans in expanding to various states in the United States. And as of now, I don't see any kind of such information coming from Bloom that they're losing orders because of this. Primarily, most of the orders, substantial orders, are also going to come in during the second half of this year is what Bloom has told us. And that's how they're going to increase their volumes subsequently. Okay.
Last question. So this, obviously fuel cell, solid oxide fuel cell has a lot of competing technologies also. There is this tech coming up from Ceres Power, which is actually also got Bosch as their partner. So that is giving significant competition to Bloom in South Korea. So wanted to understand that if in future, let's say this company becomes big, so can you supply to them also, or do you have some exclusivity contract with Bloom?
We don't have any exclusivity contract with any customers till date. And we have the technology and we have the foundation laid to address any of these technologies with any company as we will take it forward. So there's no issue of giving any exclusivity to any company at this point of time.
Okay. Thank you. Thanks a lot.
Thank you. Next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, good morning, sir. So regarding the margins in the Q4, sir, actually we are expecting some higher margins because of domestic revenue in the Q4. But surprisingly, the margins were down now. So is there any specific reason?
Bala, sorry to interrupt you. Your voice is not coming clearly.
Just a minute.
No, I could hear him. So Bala, can I answer you now? Can you hear me?
Yes, sir. Yes, sir.
Great, Bala. See, Bala, as I explained overall, right? So what we have done is our focus was on, so when we had the transition or the product mix of Bloom being changed or the shipments being deferred, whatever you can call it, because of the strategic movement towards the higher level model of Santa Cruz, our main focus was on, over the last 6 months, has been to develop various products and first articles to ensure that we have the right customer diversification and also to ensure the robust growth for the company. Because we have established ourselves very well with Bloom technology in terms of production and in fuel cell technology especially. Right? So in terms of that, also the margins are low, but our focus was on first articles, we incur enough expenditure there, and the value add of our domestic projects, the clearances of raw materials for nuclear, space, all that took some time. But we are back on track with that, and we should not really worry about this. As far as I'm concerned, I'm very clear that we are right on track in terms of where we should be moving forward. This is a temporary blip. I definitely do understand, I've clearly mentioned that. But we have done substantial work within the company by all our engineers and the team to develop various first articles and products which will really help the company to have a very robust growth moving forward. So I don't think we should really worry about this, and I'm definitely not worried. I'm actually very excited about the kind of work we have done over the last 1 year in terms of moving forward with a great amount of customer diversification. That's why we have finalized a major agreement with even II also recently, and we are working on a lot more projects with other MNCs as well, which will be signing such agreements purely based on the kind of work we have done, which does not reflect in your numbers in any case.
Sure, sir. That's great. And secondly, on sir, this electrolyzer, sir, so any further update on orders or any new customer acquisition in electrolyzer, sir?
Not as of now, Bala, because we have about 34 electrolyzers to be dispatched, which we are doing it, part of it this quarter and next quarter. But the Bloom has indicated that once they get the fresh batch of orders for electrolyzers, they will move forward with us, obviously. And I'm hoping that something should happen by second half of this year. And we have not plugged that number also into our business plan for this year. So anything happens in terms of more number of hot boxes or the electrolyzers will be an upside for the company, which we have not taken into this quarter. We have been very cautious this time about what we are saying to all of you in terms of our guidance.
Okay, so just follow up on that. So in electrolyzers part, are we in any discussion with any domestic customers? So because there are also capacities building in domestic also for electrolyzers.
See, they are talking about building the capacities in domestic, but they still have to do the prototypes and develop their product, right? There's not yet. I have not seen anyone doing that as of today. So once that happens, then we can take it forward, right? So we just have to wait and watch for that.
Okay. So lastly, on Fluence Energy deals, sir, any update on that?
See, Fluence, they are definitely going to be our partners for sure, but they're going to start first with the domestic projects and then move on to the exports, because India has to develop the capability of manufacturing the batteries required for that. Because for exports, you incur the duties. The majority of the market is in Australia and other countries where we have the duty issues coming in, because we don't have the duties to manufacture 100% in India. So as far as exports are concerned, they're working with 2-3 companies within India for the battery manufacturing. But for domestic, they are bidding for various tenders. Actually, they mentioned to me that they're working on 3 tenders. If any of those tenders, if they get it, the orders will come to MTAR. So everything is tied up with MTAR, but just waiting for the orders from Fluence. Whenever they win the tenders, they'll release the orders to us. That's where we are right now. So we have not taken that into account for this financial year as well. So if it comes, then it will be an upside for us.
Okay, that's all from my side. Thank you all the best.
Thank you very much. Next question is from the line of Bhaskar Kasera from Kotak Mahindra Asset Management. Please go ahead.
Hi, am I audible?
Yeah, absolutely, you are.
So sir, last quarter you had mentioned that you will be doing 170 crores of revenue this quarter, but delivered like only 143 crores of revenue. So what is the major reason behind it?
See, one of the reasons is on the space sector, we're supposed to dispatch our semi-cryo engine, which we're working on with ISRO. Now, there has been a small blip in that in terms of, I can't go into the details right now, but it's mostly on the ISRO side in terms of the technology-related issues. So they made last-minute corrections in some of our sub-assemblies, which they wanted us to do to ensure that the product comes out in the right manner. So to be very brief on the brazing process, so that's what is happening, and that corrections are being made right now. So that has shifted the revenue to the next financial year. So that's one of the main reasons behind this difference in the revenue stream.
Right. Got it.
Thank you. Next question is from the line of Abhijit from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir. First question is, sir, do we see a risk to our wallet share with Bloom Energy, especially in the context that there has been a moderation in the outlook for revenue growth even for Bloom, and they have suffered cash flow issues. So in that broader context, and also, sir, there has been a major design change in the fuel cell that they are operating with. So do we see a risk that our wallet share might get reduced with Bloom Energy going forward?
See, I don't, if you talk about the wallet share, see, overall, if you look at Bloom, the way their order book movement happens or the orders they book, I don't see any risk coming from there. What I would see or what we have seen over the last, once this transition has happened in terms of the change of model, reduction of procurement volumes, we went very aggressively, actually opened up our eyes as well to the client. We went very aggressively over the last 6 months, and even we were working on it even before that, but we went really aggressive in terms of expanding our customer base and quickly producing, the first articles and products for the various MNCs that we're working on with. Now, as far as Bloom is concerned, in fact, they're asking us to do more of their other requirements right now, which we're working on in terms of first articles for Bloom as well, which they have other suppliers, but still they want to come back to MTAR, the kind of quality we are supplying to them. So I don't see any risk in terms of the Bloom volumes going down. You can see only an upside from where we are today. So what we have taken into our guidance is what we have as of today. And if anything goes upside, then that's what I said, it will be an upside for us. So I don't see any kind of risk coming from that angle.
Sir, what is the assumption in terms of Bloom revenue growth for FY'25? Like, overall, we have guided for around 30-35% revenue growth for FY'25. So in that, what is the Bloom revenue growth component?
We have taken hardly about 15%.
So, right.
The majority of the growth is coming from the other sectors, especially in the aviation sector, which we are very upbeat about it. And it's going to grow even larger in the subsequent years as well, as we streamline our operations in the aviation sector.
Right. The second question would be, sir, Q4 gross margin is at around 45%, versus an earlier expectation that, given that domestic revenue mix would be much higher in the second half, the gross margin profile would look much better. And this is what is worrying me, is that, the gross margin profile, what could be sustainable gross margin profile? And, especially I think we have garnered a lot of MNC aerospace business. So in that particular stream of business, is the margin profile a bit inferior compared to the other businesses that we have?
No, the MNC aerospace, the sector margins are not inferior. See, to begin with, we look at margins of 20 to 22%, but it would improve as we streamline the operations, as we ramp up, right? So in terms of reduction of cycle times, improvement in operations and stuff like that. So over the next 1 year, we'll see a much better margins coming because of the improved operations on the shop floor. That's how it's going to work with any of these new verticals that we're working with. So that should not have any issues in terms of impacting our margins for these new projects. Right, sir.
That would be it.
If I add to my MD, as he was explaining the space, some of the products were deferred to next financial year. We are carrying the inventory at a cost basis. Lot of price escalation clauses are there, which will crystallize once we deliver in this financial year. That is also one of the contributor to the margin difference, but our margins are intact. There is not an issue.
Right, sir.
Thank
you, sir. That's it from my end.
Thank you very much. Next question is from the line of Ashish Jindal from Motilal Oswal Financial Service. Please go ahead.
Hello, sir. Ashish Jindal is a retail investor.
Hi, Ashish.
Good morning, sir. So my question is, Bloom Energy has already low reserves and their losses are eating into their reserves each year. Their share price depicts the investor outlook for the company, which would make raising fresh money difficult. Do you not see any solvency issue with the company?
No, I really don't see that. If you look at the recent developments in Bloom Energy as well, whether you heard or not, they've also signed a contract with Intel recently, with one of their major customers. And also they have enough order book to handle the various requirements they have. So it's, as I mentioned earlier, basically it is a transition phase for Bloom, moving from one system to the other system and making it sustainable over a couple of quarters. But I don't see any reasons in terms of having any risk in terms of the revenues that we can generate through Bloom over the years. And in fact, we are adding a lot more products which they are asking us to do moving forward, which we are working on that right now. So I don't see any issues out there. That's what it is. I'm in constant touch with them. So, but we have still taken very numbers what we think should be as of today. But anything which the demand goes up in the second half of the year, that we have to see.
Okay, sir. So my next question is that MTAR guidance for FY'26 comes to a little above 1,000 CR. Can you please bifurcate the Bloom and non-Bloom guidance for FY'26?
See, basically, if you remember, we were at 70% with Bloom. Our aim over the next 3 to 4 years is to. We're not worried about Bloom coming down. Bloom will do the numbers higher and higher, but our target is to bring down, diversify to various customers so that the Bloom percentage would come to around 35 to 40% or even less, right? So in FY'26, if you look at it, it would be around that range. We're looking at 450 crores or 500 crores or even less than that.
Okay, sir. So my last question is, can you please give some information about the long-term defense sector outlook for MTAR?
We are working on various, we also have a defense license, if you remember that. So our R&D is still working on various products that we can really work with them. In India, it takes time to get them certified and, with various of these products. But what will help us is to collaborate with MNCs to bid for the projects which the Army is looking for in the long run. So that this license would help in that way. So on immediate basis. So we are looking at such projects as well. But our main focus, defense is very technical in terms of what we can get. But fortunately, we are in multiple segments, diversified portfolios. So it helps us to, take our time to build our defense portfolio in the long run.
Okay, sir. Thank you, sir.
Thank you. Next question is from the line of Anupam Goswami from SUD Life Insurance. Please go ahead.
Hi, sir. Sir, can you give us a little guidance on the order inflow mix in the next year? How we are seeing order from agreement as well as from Bloom? And also H1, how you are seeing, and what is H2? Which half will we have the bulk of the orders mostly?
See, the most important thing is we have enough orders for this year to execute. Our guidance of revenues is not linked to the orders. Second is, if you look at nuclear, as I've said earlier, we're expecting 500 plus crores of orders from Kaiga 5 and 6. Those tenders are all finalized, but I think they are going to open the tenders probably in the month of June. When they're going to do that, I'm not aware, but that's what they have said. And once they do that, there is a process for which ultimately MTAR getting those orders, but we have not plugged in those revenues linked to these orders for this financial year. So the nuclear segment order book will be very strong by end of the year because there's going to be a refurbishment of the Tarapur reactor as well, which MTAR will get involved. And that will happen during second half of this year, where we should bag the order by end of this year. and that's another 130 to 150 crores of orders. So totally, we're looking at about 650 plus crores of orders going in. And these orders will be executed in the subsequent financial year. So the nuclear segment will eventually move up the ladder in terms of revenue stream year-on-year basis. So that's where we are looking at as far as nuclear is concerned. Space, we get regular orders, which we continue to get within the year. We are expecting another 70 to 80 crores of orders coming in the current financial year. And obviously, in the aerospace sector, which we are signing various agreements right now, we are very upbeat of it, and we are expecting substantial orders coming in because of the kind of first articles work we have done, and we'll continue to do those first articles for various MNCs during the current financial year. So we might close in with an order book of 1,400 to 1,500 crores by end of the year. That's what we are expecting at this point of time.
And when do we see the Bloom orders also recovering? And also, sir, because we did some 1,400 level of revenue this time, but our gross margin were grossly impacted, and so is the EBITDA margin. How do we see this improving? Even though we have orders to execute, but how do we see the margin improving?
The margins would improve over the second half of the year. We are progressively improving our margins because the operating leverage what we had with Bloom has reduced right now because of lower volume, but it will definitely go up as we move forward. And obviously, we've added a lot more other customers right now. So definitely, quarter-on-quarter basis, our margins will improve, definitely. And as I said, even in FY'26, our margins are going to go up by 2-3% notches higher. So that's what is going to happen. So the Bloom volumes are going to, see, we have taken 3,300 units. Last year, we have done 2,700 units. Now, the volumes go up, that will create a lot better margins, which we have not considered right now. But definitely, we are seeing some kind of uptrend happening in the second half of the year, and let's hope for the best. That's what we're looking at, but we have not considered that as of today.
So Bloom orders will also, we are expecting about second half of the year to recover?
That's what we're looking at right now, for sure.
Okay, sir. Thank you. I'll join back in the queue.
Thank you. Next question is from the line of Meet Jain from Motilal Oswal. Please go ahead.
Hi, sir. Just on the guidance part, like earlier we guided in around 900 crores of revenue in FY'25, and which cut down to almost 750 crores. So where was this major gap coming in? And also on the space side, we guided around 150 crores of top line in FY'25. So are we firm on that guidance?
Yeah, we are. As of today, look, we have taken a conservative outlook. We would like to do that. We are firm on this. Looking at as I explained earlier, what has happened in the past financial year, we are very clear about it. But what is most important is, as I explained, we have done a lot more work in terms of building the proper growth for the company for the future. In the last year, it does not reflect in numbers. But yes, we have taken this guidance we have given this guidance very cautiously, and we'll see how it will go from here on quarter-on-quarter basis. This is the beginning of the year, and we'll see how it goes on quarter-on-quarter basis, how it will move. But it will move. It's not going to be on a downtrend for sure. That much I can guarantee every one of you. But it will definitely, that's how we are doing a cautious guidance, and that's how we move forward.
So just to understand, where is this major cut coming from? Like earlier we guided clean energy to 400 crores of revenues. So are we seeing a major cut from the clean energy part because of Bloom order book?
We have reduced partly on the clean energy part. We have reduced we have not considered the fluence energy revenues, fluence energy revenues as well as of today. So we have reduced at various levels. But certain things happen, then we go back to the numbers what we're looking at. But as of today, this is where we stand.
Okay. And on the same for the margin side, so margin, like we are expecting around 22% margin FY'25. So where are we still seeing higher cost? So can you guide that also? Are we doing more first articles? That's why we are guiding some kind of lower margins and expanding there. Can you throw some light on that?
Yeah, absolutely. Because see, when we do the first articles, even for like last 6 months to 9 months, we're working on first articles, there's a lot of expenditure incurred in that, right? But what it gives you is a very good revenue stream and EBITDA margins moving forward once we streamline the operations. So definitely the EBITDA margins will get improved once we establish all these verticals, which fortunately, our team has done a great job in securing these agreements and convincing the MNC customers in what we have shown them. So definitely we'll see improvement in these margins as and when we streamline the operations in terms of the new verticals that we have developed right now.
Okay. So, as you mentioned earlier, our margins from the Bloom Energy orders have also declined. So, how soon can we expect that to improve, like you mentioned, from second half? This is based on the volumes are we doing in FY'25?
Yeah, that's right. See, as of today, the kind of volumes we have given the guidance, that's where we stand. But if there is an upside to it, then obviously the operating leverage will be much better and the margins will improve. So, we're definitely expecting an upside to it, but we don't want to talk about it right now, at this point of time, and we would stick to this initial guidance what we have given for the year. And as and when things improve, we'll obviously inform all of you.
Understood. As a last question, and as we recently got the defense license, right, and we also mentioned that we are looking for some partners. So where are we on that?
We are working on that. In fact, we're having a couple of meetings even in the month of June. So that's a process by itself, right? Bidding for the tenders jointly with collaborative way. That's the fast track way of doing it because we have the license and we are working towards that. And we would like to work with companies which are in sync with us in terms of margins that we can maintain. That's also very important in such collaborations. So we are working on such projects, as I mentioned earlier, and once it happens, then we'll let you know about that. We are sincerely working towards that.
So are you also developing that in-house, any products for this defense industrial license?
Yeah, we are definitely doing that. Our R&D is working on various products, and once then the process of getting certified and all that. So that's the process that we're following right now.
Okay. Thank you so much for the questions. I'll join back in the queue.
Thank you. Next question is from line of Eloni from Pi Square Investments. Please go ahead.
Hello, am I audible?
Yes. You're absolutely audible. Go ahead.
Yeah. Hi. I just wanted to get some clarity on the aviation sector long-term agreement that you spoke in the opening comments. Just wanted to understand what is the long-term agreement. I think you quoted around $19 million. So can you just, throw some light on the same?
Yeah, sure. See, basically, this is with Israeli Aerospace Industries, where we are supplying the assemblies to them. This is a contract agreement to be supplying over the next 15 years with a estimated, value of 90 million plus or whatever to 120 million over the next 15 years. So this is one of the projects. So we are also working on 4 or 5 other projects, where as and when this, we finalize everything, then such agreements will flow in. So that's why I said over the next 2 quarters, you will see at least about 2 to 3 more agreements happening with MTAR. The kind of facilities we have. As you're aware, we are now commissioning a state-of-the-art aerospace division in Hyderabad as Unit 7, which is getting commissioned in the month of June. This is being exclusively done for all these MNCs to execute their orders and requirements over the years. So that's where we stand right now.
Okay. And what would be your CapEx guidance for FY'25-26?
FY'24-25, right?
Yeah, like for the next 2 years. Yeah.
For FY'25, we are looking for around 70 to 75 crores, which includes already existing POs which issued last year. So FY'26 will not be that much. It is based on the new programs which we receive. We will take care based on the business case analysis. Like, for example, Fluence we are talking, and all those things, separate capex required, which we will take care based on the business case requirements. As of today, it is not factored into our FY'25.
Okay. Got it. Thank you so much. All the best.
Thank you very much. Next question is from the line of Rudresh Kalyani from Kalyani Private Business. Please go ahead.
Hello. Am I audible?
Yes, sir.
You are. Please go ahead. Yeah. We were doing something on the with in-space program, right? So, when are we going to start minting money from that? And any insight on that? Could you repeat your question, please? See, we were doing some space program with the in-space, right? In-space program of the government, ISRO. Yeah. Yeah. Yeah, yeah.
Oh, you're talking about the SSLV, right? So basically, yeah, that's a project by itself which we're working on, which is like a 4 to 5 years kind of a project which we're working on with a team of scientists that we're working on right now with our team. And it would take that much time to develop the launch vehicle. So we are working on that, and that's where we are right now. It's a 4 to 5 years kind of a program.
So we are not expecting anything from it until 2027, 28, something like that.
Yeah, it takes that much time, right, to build a launch vehicle. It's not that easy. So we are working on that, which is a very unique vehicle with a liquid propulsion engine. So that would take that much time.
Okay. And one more question is on, few months back, the government quoted 1 gigawatt hydrogen fuel project. So, are we doing anything on those lines and enter into that?
We are not entering into that, but the final product manufacturers like Bloom and other companies who have the right product to do it, they will definitely enter into that. And we are doing the contract manufacturing. So once these projects come into limelight and any of these orders are booked, then obviously MTAR will get benefited from those.
Okay. Thank you. That's it from my side.
Thank you. Next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Sir, can you talk about the US business has any impact of increase higher cost of capital to Bloom or your business also? And how is the any policy change you are expecting for US election going on in November 2024?
No, we are expecting a better policies moving forward as well, right? So I think we all know that the elections are happening in US in November. So a lot of companies are holding back until such time to see the change of policies or better. Obviously, there will be better policies in place. That's what we are looking at. But a lot of companies are looking at it until the elections are done. So we have to wait and watch and see how it goes.
And about the increase, the cost about cost of capital increased, any impact on your business, capex cycle and all?
Gunesh, you want to answer that?
Yeah, see, the cost of capital is not, presently for working capital that I'm talking, our cost of capital is only 6%. For in case of US dollar loans in capex related, we will use the US dollar loans since we have a natural hedge already. It is there. We will use US dollar loans and see that our cost of capital will not be more than 8% or 7.5%.
I am talking about your business, your client in US, and cost of capital has increased there. So
in US Bloom Energy.
US demand, yes, I am talking about Bloom demand. Any impact on the capex of US because of higher cost of capital, and you are getting pinched with this higher cost of capital through Bloom?
No, if you look at the companies which Bloom is dealing with, right, most of the equipment they're selling on outright sale, like they're dealing with companies like Apple, Google, all these kind of companies, hospitals, which are well funded. So Intel, for example. So I don't think that's going to be a major impact for Bloom as such in terms of increase in capital costs in the United States.
Our pricing are fixed and there is no impact to our the cost of capital for the Bloom or USA. So our prices are fixed.
Okay. And any competition from the solar power and then hydrogen, the cost comparison, people are shifting more towards the solar, not the hydrogen?
No, hydrogen, as I said, is going to take time, right? I mean, it's something which everybody wants to do at the end of the day. Like, for example, did you imagine that 10 years back you'll have electric cars? But if you ask me today, probably 7 to 8 years from now, you'll see more of hydrogen-related locomotives. So it's a matter of time that we move to that, to zero carbon emission. That's what the whole world is looking at because of climate change. And that's what they're giving a lot of incentives in subsidies in terms of getting into this line of activity moving forward as well.
Okay. Thank you so much.
Thank you very much. Next follow-up question is from the line of Vipraw Srivastava from Incred Research. Please go ahead.
Thanks for allowing me to ask a follow-up. I'm audible, right?
Very audible. Go ahead.
Yeah. Just wanted to say, so what's happening with Bloom is that they're seeing a lot of demand in data centers in US due to generative AI boom, right? So that has actually resulted in people being very optimistic about the company. So how do you see that playing out? Will that lead to incremental demand in coming years over a longer term viewpoint? And data centers will also come to India ultimately. In India, Bloom does power for Intel in Bangalore. So let's say data center ramps up in India and grid obviously won't be able to supply all that power. So that's where Bloom fits in. How do you see that developing over, let's say, next 3 to 5 years? How is that developing?
Yeah, this is what Mr. K.R. Sridhar, the CEO of Bloom, has mentioned even 6 months back, that he's going to see a real upside in terms of the artificial intelligence, AI data centers coming into play in the United States as well as all over the world. So Bloom plays a perfect role for such data centers, which are already powering some of the other data centers as well today. So the AI data center is going to be a real upside for Bloom as well as progress over the next 3-4 months to 5 months, 6 months. So in the long term, yes, definitely that's going to have a major, upside for Bloom as well, which we have even seen the recent articles of how this AI data centers are going to give a positive impact to Bloom moving forward as well.
Thank you.
Thank you very much. Ladies and gentlemen, in the interest of time, that would be our last question. I will now hand the conference over to Mr. Srinivas for closing comments.
Thank you very much for attending our earnings call. And as I said earlier, that we definitely had a pause of our earnings for FY'24, but you need to please look at our long-term goals of MTAR and kind of work we have done in the past 1 year to build a strong customer base to enable a very robust long-term trajectory for the company. And I would like to once again thank my entire engineers, middle and senior management of MTAR, and obviously all the shareholders and investors who have been supporting us. And we really look forward for better and better performance moving forward over the next 3 to 5 years. Thank you so much.
Thank you very much. On behalf of MTAR Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.